show then. An EV asset management and leasing startup, Electrify Mobility, has raised close to 25 crore rupees in a seed round. It's a mix of debt and equity, which saw the participation from Asian Development Bank Ventures, Advantage Founders, etc. and more. Kunal Mundra is the founder and CEO at Electrify Mobility and now joins in on the show. Kunal, thanks so much for taking the time out. Let's begin by understanding what exactly the proceeds will be used towards. It's clearly going to be, ramping up your footprint and expansion, I understand.
At Electrify, what we'll do is our aim is essentially to enable the electrification of transportation in India, which means the more assets we can deploy through our leasing platform, the more we can help in that outcome. And that's why the primary use of these proceeds is firstly to deploy more assets under our leasing business. And the second is really, obviously growth of electrification will happen pan-India, and we want to be able to support our assets that we've leased out across India, which means building out service and maintenance infrastructure, which is the second thing for which we'll be using these funds.
Sure. So with this investment, can you tell us a little bit more about how much you're looking to deploy in commercial EV assets over the next 2 to 3 years?
So, the way we think about this is that unlocking electrification on the commercial side is not really about creating demand for it. I think enough commercial operators out there realize that moving to electrification is the right outcome for their business. Regulations also been very supportive of it, right? On the other side, you have a lot of lenders who do want to deploy money in this space. And I think the big unlock that's really required right now is on the asset side, because while there are OEM, most of the folks on the commercial side who want to buy these assets are not completely clear on which asset to buy. And then on the other side, you've got lenders who are very worried about asset risk. So the way we think of ourselves is we are really the asset leasing player that stands in the middle. We will help our customers choose the right EV asset for their use case. We will give them a lease for the same asset and actually help them service and maintain it. At the end of life, we'll be able to actually take it back, refurbish it, and redeploy it. And along the way, because we're very asset first, our idea is to give them very flexible models of leasing. So the idea essentially over the next 2 to 3 years is to make sure we deploy close to 20,000 vehicles across two-wheeler, three-wheeler, and four-wheeler using a very flexible lease offering along with a set of value-added services around service and maintenance.
Right. So how exactly does it work? Because I understand that the company helps NBFCs and banking partners reduce their credit and asset risk.
So, right now, the biggest challenge for banks and NBFCs is their worry is that, hey, I've given a 3-year lease on an asset that turns out to have a life of 1 year or 2 years, right? At which point their credit risk just increases exponentially and their ability to cover their loan actually increases as well. What we do is, based on our own engineering efforts, we make sure that we are matching the lease tenure with the actual lifespan of the asset, and we price that accordingly. So for lenders, what happens is they have us as a counterparty, and we carry the entire residual value risk of the asset, and we help them price that asset correctly across the tenure of the loan. So that's how we help the credit suppliers, which is banks and NBFCs, reduce the asset risk. We also, for example, are working with some of them where if they've got customers who are under financial stress, we will come in, we'll actually buy those EV assets because we have the ability to refurbish and redeploy them, which ensures that the utilization is achieved on those assets and those assets don't actually become NPAs either. So those are the different ways in which we help our credit partners reduce their asset risk.
Oh, yes, indeed. And, given that we have seen an improvement in the quality of vehicles, there has been a rapid reduction in battery prices. How have you looked at all of these steps, as well as the kind of supportive government policies in aiding you and the sector as a whole with your journey?
I actually think, the government is part of why there is such a push on the commercial side. One part is, of course, that they see the commercial benefits of moving to EV. But I think the government has also been playing a very strong role in creating the tailwinds for electrification. I think, that the nature of regulatory support will keep changing as the industry evolves. But I think right now it's giving us the right amount of support as we look to electrify at least the commercial space. Unlocking the retail space will be a journey by itself.
Kunal, what about competition? Because one can't deny that there are a number of players, Om Mobility, Odd Mobility, be it Vidyutech, etc., and new ones cropping up in the space. How do you deal with the competitive intensity?
No, look, firstly, I think I look at competition at a broader level. I think even if I was a commercial operator, I always had the option to finance my assets, in which case, effectively, Electrify is competing with every bank and NBFC out there. And then I have the option to actually lease the asset. I think when it comes to financing versus leasing, we feel like for most of the customers out there, while they can finance if they really want to own the asset, leasing gives them so much more flexibility over a longer term, because as their utilization increases, decreases, they have flexibility to return assets. They also have the option to not take asset risk because they know the lessor has done the due diligence. So firstly, between I think leasing and financing, I think leasing is able to put a very strong foot forward. Also, additionally, for most of them, many of the fleet operators, for example, in India, their balance sheet is not strong enough to really support financing, right? So that's one, which is how do I see competition from the financing side? I think leasing provides enough opportunity for us to create a differentiated offering for them. I think versus the competitors that you mentioned, this market is extremely large. I think right now, as you think of the numbers, and you would have seen numbers out there, it's 50 billion, it's 100 billion. There are lots of large numbers being thrown around. I think the fact is this is not a winner takes all. Over time, each of us will have to make sure that we're really focused on solving the customer problem. And if we do that, I think there's more than enough space for all of us to really grow this out. So I think at this point of time, honestly, given how young the industry is, competition is honestly a great outcome for us. The more the competition, the more the momentum in this industry.
All right. Thanks so much for taking time out and joining in. We'll take